I am genuinely shocked, ladies and gentlemen. The moment has finally come. Wall Street are starting to show signs of actually understanding the bigger picture when it comes to Tesla. Morgan Stanley have just published a shocking new research note, a little over 2 weeks after Tesla's mind-blowing FSD V12 demo. Key among the comments and insights in this new note, Morgan Stanley are now modelling Tesla licensing FSD to other companies. They've increased their Tesla stock price target, courageously, I've got to add, to $400 per share. To $400 per share from $250 per share previously. We're talking about robots, Dojo as a service, and more. Is this real life? So fair warning, make sure you are sitting down for this. And don't forget, if you guys would like to support the channel and unlock a load of exclusive content, you can do so by clicking the links in the pinned comment to join Patreon and subscribe over on X. A massive moment here on Wall Street, ladies and gentlemen. After more than 2 weeks, Morgan Stanley have finally finished spell checking their new research note following Tesla's mind-blowing FSD V12 demo, a watershed moment for the company. Now, I personally give approximately zero fucks about the opinions of folks on Wall Street. However, many big institutional investors really care a lot about what Wall Street has to say about certain companies. So it will be very interesting to see the reaction in Tesla stock, or perhaps a lack of reaction, in the next week or so, particularly as the market opens on Monday, after this new note from Morgan Stanley, who have massively increased their Tesla price target and now named Tesla stock as their top pick. Unlocking Tesla's AI mojo, enter the Dojo, upgrade to overweight, price target to $400 per share. It's now their top pick. Investors have long debated whether Tesla is an auto company or a tech company. We believe it's both. But see the biggest value driver from here being software and services revenue. Well, that makes two of us, Morgan Stanley. The same forces that have driven Amazon Web Services to reach 70% of Amazon's total EBIT can work at Tesla. Now, just jumping in here, I just got to do this. Any regular viewers of the channel will recall me making the comparison between Amazon Web Services printing money and the same thing with, yeah, we've been there. Okay, cool. Yep. If I didn't know any better, I'd think Morgan Stanley were copying my homework, but I do know better, as if they're spending time watching dickheads insult them on YouTube. Point here, however, is they're starting to think a little bit more like me, which I'm not sure I should be happy about or disturbed by, or both. In our view, opening up new addressable markets that extend well beyond selling vehicles at a fixed price. The catalyst? Dojo, Tesla's custom supercomputing effort in the works for the past 5 years. And here it is, ladies and gentlemen, version 12 of Tesla's full self-driving system by end of year, and Tesla's next AI day, early 2024, are worth watching. So again, emphasizing, Tesla stock now the top pick at Morgan Stanley with a price target of $400 per share, the stock having closed around $250 just before this note was published. That is a lot of upside. And I have to give credit to Morgan Stanley here. They have some courage here. This is confidence and leadership among their Wall Street peers. It does take some courage to research, to do your own thinking, then to assign a fair valuation that is significantly above or below where a stock's currently trading. It takes zero testicles at all to have a price target within a few percent and just chase a stock one way or another. So this is good to see from Morgan Stanley. I have to give credit where it's due. For once, they're no longer in need of a massive roasting. What are the odds, by the way, that many other sheep on Wall Street will start following suit with their own notes this week, next week, in the following months, and their own price target upgrades, chasing after Morgan Stanley? Oh, Tesla's an AI company now. FSD's a big deal. Dojo. Only time will tell. We believe that Dojo can add up to $500 billion to Tesla's enterprise value. Just taking a moment here. As I record this, Tesla's current market cap, give or take, around $800 billion. Expressed through a faster adoption rate in mobility, robotaxi, and network services. The change drives our price target increase to $400 versus $250 per share previously. We upgrade to overweight and make Tesla our top pick. What is Dojo? Dojo is a purpose-built supercomputer designed in-house by Tesla to train the full self-driving system that sits inside every Tesla vehicle. Why is Tesla doing it? Tesla's cars are sensor-encrusted robots. Now, take a moment here. They're finally getting it. I'm going to read this again because it's accurate and it's coming from Wall Street. Tesla's cars are sensor-encrusted robots, making life and death decisions in highly unpredictable environments and driving situations. Tesla's ability to improve the efficacy of its full self-driving system is limited by the ability to collect and process real-world data from the edge to train these robots from the experience of its vehicle fleet in service. Are you sitting down for this? Which is 5 million units today and closer to 50 million by the end of the decade. Now, I do beg to differ here. I think it's going to be closer to 100 million, but I'm normally roasting Morgan Stanley for being off by like an order of magnitude. Now I think they're actually within maybe a 1x. If I'm at around 100 million and they're about 50 million, that ain't bad for some folks on Wall Street. And it's very important to understand the size of Tesla's fleet is incredibly important to the company's future valuation. Why? Multiply the size of Tesla's active fleet by monthly software revenue per user, and you start to get an idea, a sense of how much money Tesla could be printing essentially out of thin air. It's ridiculous. And again, for more on this, please refer to my Tesla valuation model, available exclusively on Patreon to supporters at the investor level and above. Since first publishing the valuation model back in 2021, I've had to sell for every year throughout the next decade the exact number of vehicles I anticipate in Tesla's fleet. It's so important. It's been there from day one. Tesla management has said it needs as much compute power / NVIDIA GPU clusters it can get its hands on, and currently it cannot physically secure the amount of chips necessary to train cars. In addition, they believe they can develop a more efficient system for their specific needs while not funding a supplier's 60% gross margin, aka more vertical integration will save a ton of money. With a highly experienced semiconductor team, but I thought Tesla was just a car company. Why would they have a highly experienced semiconductor team? Tesla has built a custom AI ASIC chip that, due to its core function of processing vision-based data for autonomous driving use cases, can operate more efficiently, energy consumption and latency, than the leading cutting-edge general-purpose chips on the market, e.g. NVIDIA's A100s and H100s, and at a fraction of the cost. And this is true. The NVIDIA chips are great, however, they're general purpose. Tesla's own chip has one job, and it's optimized for that one job. Dojo is a training compute made up of many thousands of D1 chips housed on an AI data center. It trains the inference engine, FSD chip, that sits within the vehicles at the edge, which Tesla has designed in-house for the past 7 years. Tesla is not the first tech player to attempt to build a custom silicon system in-house. What's unique about Tesla is the company's long-time experience with advanced driver assistance systems. It has commercialized a vast network of vehicles that is consistently increasing. 400,000 plus vehicles using FSD on the road already collecting data from 300 plus million miles traveled. In addition, the company has brought together a world-class design team and has allocated expansive resources toward the autonomy problem. Like other tech platforms, Tesla pursues high vertical integration in key technology domains to enable high iteration and continual improvement while helping to diversify away from over-reliance on third-party suppliers that may not be able to provide an optimal solution for Tesla's specific needs. In short, Tesla does all the shit they need to themselves because they can do it better and cheaper and faster. But remember, Tesla is just a car company, so moving on. While it is difficult to explicitly validate the many claims Tesla has made about Dojo's cost and performance, we believe Tesla has a chance of bringing forth a competitive customized solution given the company's innovation track record and capabilities. Yep, totally agree. I mean, at this point in time, the only people who doubt Tesla and don't give them the benefit of the doubt still live in their mum's basement and hate themselves. Tesla's got a proven track record. They're an honest company. They tell us their intentions. They talk about their mistakes, their errors. They're not trying to hide things. Tesla doesn't try to keep up appearances. So when they tell us they're doing something or they've done something or here's a number, it's worth trusting them now. They have a history of telling us long-range goals and achieving those goals. So now the onus is on the doubters to explain why on earth would you doubt a company who now has a track record of doing what they said they were going to do. And again, the answer is the only reason you would doubt them is if you still live in your mum's basement and hate yourself. In this report, we present a comprehensive primer on Dojo involving insights and opinions across Morgan Stanley's AI and semiconductor research teams. We explore what Dojo is, why Tesla is doing it, and how it can impact the business and the stock's valuation. We invite investors to dive into the world of custom silicon at exaflop scale, solving some of the world's most challenging problems, autonomy, offering a gateway into vast, untapped commercial potential. Just to translate that jargon, vast, untapped commercial potential starts with trillions and ends in dollars of opportunity. The more we looked at Dojo, the more we realized the potential for underappreciated value in the stock. Again, better late than never, Morgan Stanley. Like many other large cap tech stocks on your screen, we believe Tesla can reasonably test its all-time highs of $400 over the next 12 months. So there you have it, folks. A bold call from Morgan Stanley. It appears the guys at Morgan Stanley have finally found their testicles, and I love it. We need more of this on Wall Street. Now let's look at Exhibit 1. Tesla's capabilities and business model can significantly benefit from the development of custom AI tools. It's too big and too specialized an opportunity not to have in-house. Now, as we know, Tesla has a massive amount of data capture. What other company has 5 million plus sensor-encrusted robots on roads collecting data? Answer, there are no other companies. And who's adding another 2+ million per year? No one, just Tesla. They also have the world's top talent, a huge amount of vertical integration, including both hardware and software, and accurately, unlimited access to capital. And what's the world's hardest compute and software problem? Autonomy. For years, we've tried to focus investor attention on the potential of Tesla's leadership in EV hardware, semi-autonomous electric robots, to convert vehicle owners into subscribers, generating highly recurring and high-margin revenue. While Tesla has had some modicum of success on this front to date, we believe Tesla's in-house computing efforts have the potential to materially accelerate the network effect and speed of data capture, analysis, and learning from the 1 billion miles traveled per day we forecast is executed by its global fleet by 2027. The scale and complexity of the data, the collective global light vehicle fleet travels a distance of nearly 2 light years annually, combined with the high standard of safety requirement, make the global mobility market highly relevant territory for the expression of the AI investment theme. My God, this Wall Street jargon. We believe Dojo can accelerate Tesla's auto and software as a services double flywheel. So on the left here, we've got the automotive flywheel. Costs come down, profits go up, sales go up, prices come down, designs improve, capacity increases. Awesome. On the other end, we've got the software as a services flywheel. Tesla's got lots of data. They improve the user experience. Users become sticky to the platform. Shout out to everybody who got trapped in the Apple ecosystem. Affordability increases. Monthly user base increases. Software services revenue increases. We collaborated with a range of AI experts at Morgan Stanley to weigh in on Tesla's AI ambitions and to compare and contrast them to those of NVIDIA and other hyperscalers. Extending beyond the implications for Tesla, we hope this work sheds light on the potential of the broader custom silicon market. Dojo, before and after. What's changed? Before Dojo, Tesla apparently was targeting the automotive industry. After Dojo, multiple industries. Before Dojo, AI training speed. Slow. After, fast. Before Dojo, capex, high single-digit billions. After Dojo, low single-digit billions. Morgan Stanley referring here to the cost of compute. Before Dojo, inefficient energy usage, and after, efficient. And interestingly, and accurately by the way, before Dojo, data processing was a cost. After Dojo, data processing becomes revenue. Shout out to Dojo as a service. In conjunction with this report, we feel it is prudent to include a degree of optionality for Tesla's AI potential in our revised price target, which has increased to $400 versus $250 previously. Our bull case valuation is raised to $550 versus $450. I mean, why even bother? It's so close to their base case. They should really call their bull case our slightly better than base case. And our bear case valuation is raised to $120 versus $90 previously. Within our forecast and valuation, we express the potential of Dojo through our raised assumptions, primarily for Tesla Mobility, autonomous robotaxis, and Tesla Network Services, software as a service business derived from Tesla vehicles and third-party customers. Keywords here, third-party customers. We'll talk more about this in a moment. Better late than never, Morgan Stanley. In the form of faster adoption and higher average revenue per user. We share a comprehensive review of Tesla valuation on our new earnings forecasts, which have increased approximately 20% by 2025-2026, which we believe fairly underpins our $400 price target versus the growth and valuation multiples of the relevant tech peer group. Executive summary. Our thesis in 3 charts. We believe Dojo can represent the next step change in market perception of Tesla. Dojo emphasizes 3 of Tesla's core capabilities. 1. Speed. 2. Performance. 3. Cost. In the near term, we believe Dojo can accelerate the development and monetization of Tesla's software and services business. Longer term, we see scope for Dojo to provide avenues for Tesla's software and hardware capabilities to extend well beyond the auto industry. I love to hear this. They are starting to get it. If Dojo can help make cars see and react, what other markets could open up? Think of any device at the edge with a camera that makes real-time decisions based on its visual field. Can someone say humanoid robots? Tesla estimates that Dojo can provide 6 times cost savings versus current state-of-the-art GPU alternatives. On our calculations, when comparing what Tesla would have to spend on equivalent compute from NVIDIA, Dojo has the potential to drive around $6.5 billion in cost savings for Tesla over the next couple of years, to reach the company's stated goal of materially increasing internal computing power by October 2024 to 100 exaflops. This is achieved by having a purpose-built in-house semiconductor and AI tech stack. Dojo became operational in July of this year, and we believe the continued rollout and subsequent company announcements will provide the catalyst for investors to appreciate Dojo's potential. Saving some of the best until last, folks. Check this out. For our Tesla modeling purposes, we focused on the potential for Dojo to deliver autonomy and network services revenue at a faster attach rate with higher average monthly revenue per user, driving a material increase to our estimates. We have not given Tesla credit for specific cost savings from Dojo versus its current supercomputing budget, nor have we given Tesla credit for any non-auto related revenue streams. With significantly increased computing power and faster processing speeds, Tesla's path to monetizing vehicle software can materialize sooner and at higher recurring revenue rates. And now for the big one. We also, for the first time, incorporate non-Tesla fleet licensing revenue into our network services model, as we expect recent charging station cooperation will extend into FSD licensing. Welcome, Morgan Stanley, to what's been in my Tesla valuation model since I first published it back in 2021. Better late than never. So this is big. Again, it was obvious. I've been talking about this for years. But now Morgan Stanley are modeling Tesla licensing FSD to other companies. It's been inevitable that this would occur. 4 years. That's why it's been in my Tesla valuation model. 4 years. Again, feel free to fact check me if you've got the very first copy I ever published back in 2021. And this has a massive impact on Tesla cash flows, profitability, and valuation. But the fact that Wall Street are now starting to get this, and they're only now lagging in this thinking by about 2 years, very impressive. And interestingly, and accurately by the way, Morgan Stanley now also forecasting Tesla licensing their operating system, which is something I've also discussed. Although in fairness, I suspect most likely the OS is probably going to be a package deal. You get FSD and you get our OS. Maybe it won't be. But what company would be dumb enough to recognize it makes sense to license Tesla's OS in their vehicles, but not FSD? Once again, I do have to emphasize how impressed I am. I shouldn't be, but this is Wall Street. They're now starting to get it. The penny is finally starting to drop. They're now modeling FSD licensing. And they also expect companies will start using Tesla's OS, which I've been talking about for years. And now here it is in a research note from Morgan Stanley. This is big progress. As I mentioned, I personally don't care what Wall Street thinks. I make my own decisions, do my own research, and have drawn my own conclusions, which is why it's pretty hilarious that they're now figuring stuff out that's been in my valuation model for a couple of years. But the point is, there's a lot of big investors, institutional investors, pension funds, and so on, who look to Wall Street for guidance on what to invest in, what companies are worth, where opportunities lie in the stock market. This research note may be a bigger deal than you might imagine. Oh, by the way, in unrelated matters, I sure am glad I've been buying Tesla stock with every spare cent before Wall Street started to get it. We now forecast Tesla Network Services to reach $335 billion in revenue in 2040. Now, we're going to stop and talk about this. Did they just say 2040? Jesus fucking Christ. They did. What's going on? They're starting to think long term. I really like this. Versus $157 billion previously, and expect this segment to represent over a third of total company EBITDA in 2030, doubling to over 60% of group EBITDA by 2040 versus 38% previously. And this increase is largely driven by the emerging opportunity we see in third-party fleet licensing. I like how they're calling it an emerging opportunity. And again, it's been in my valuation model for a couple of years. But anyway, whatever. I got to stop roasting them for this. But I mean, the facts are the facts. And it is kind of embarrassing that some guy on YouTube has been calling this for years, and now Morgan Stanley are finally starting to recognize this. But hey, better late than never. And again, among their peers on Wall Street, they're actually, I can't believe it's true, but they're actually leading in terms of this insight. Not completely though. Remember Tom? Tom started modeling FSD licensing a few months ago. Anyway, I got to stop roasting these folks. Increased average revenue per user, with operating leverage driving higher long-term EBITDA margin versus prior forecast. In addition to network services, we indirectly ascribe the value of Dojo to our Tesla Mobility robotaxi assumptions, increasing long-term fleet size and margin. And third-party battery business, as we believe the charging and FSD deals will also result in higher hardware attach. Now onto the charts. Tesla's claims of 6-time performance improvements imply multi-billion-dollar cost savings from Dojo. In blue here, the cost of 100 exaflops with A100s produced by NVIDIA versus the cost of 100 exaflops with Dojo. This is why it makes sense, if you can, to vertically integrate as much as you can, especially on big ticket items like training compute. We made no changes to our assumptions for Tesla Energy or Tesla Insurance. The modest $7 a share increase in the value of core auto business was mostly related to an increase in our exit EBITDA multiple assumptions to 13 times from 12 times previously. Our near-term 2023-2024 core auto assumptions for volume and gross operating margin were unchanged. I can see here in a note, Dojo's impact on Tesla Mobility and network services drives 86% of our price target change. Stretching your thinking. Could success in vehicle autonomy enable Tesla to become a go-to provider for visual data processing across other adjacent markets? By the way, if you guys don't know, they are currently describing Dojo as a service. Again, please refer to my earlier comments about Amazon Web Services. That's what they're getting at here. Although Dojo is still early in its development, we believe that its applications long-term can extend beyond the auto industry Dojo is designed to process visual data, which can lay the foundation for vision-based AI models, such as robotics. Why does robotics ring a bell? Kind of feel like, oh yeah, the Tesla humanoid robot. Healthcare and security. In our view, once Tesla makes headway on autonomy and software, third-party Dojo services can offer investors the next leg of Tesla's growth story. Again, they're right. There's a huge opportunity that most investors are completely oblivious to, but it's going to be massive. Won't happen tomorrow, but I'm telling you, just like Amazon solved their own issue with Amazon Web Services, did something internally. Oh wait, this is, you know what? This could be a money printer. Let's let other companies. Oh great, bam, and the floodgates open. The same thing will happen with Dojo. But currently, Tesla needs all the training compute they can get for themselves. But at some point, Tesla will have a surplus, and at that point, anyone who wants to train on video is going to be mad not to use Dojo as a service to train their own AI. And this will be a deca-billion-dollar opportunity. It's one of the noted exclusions in my valuation model. Now, for those who don't know, in addition to everything that I've modeled out in my Tesla valuation model, there are a few notes, explicit exclusions that I know will be massive money printers, but I've not yet included in the model. The Dojo as a service is one of them. I have modeled this out privately, but it's still a little bit too uncertain to include publicly. But at this point in time, even with not a lot of information, I firmly believe the Dojo as a service over the long term will be a deca-billion-dollar revenue stream for Tesla. It may even, over the ultra long term, become a center-billion-dollar revenue stream. But that is a little way off. Like I said, Tesla's going to need all the training compute they can get their hands on for their own needs, at least for a few years. So I have to say, I kind of feel like I'm in a dream here. A new note from Wall Street with a courageous, massive increase in Tesla's price target to $400 per share, previously $250, not because Tesla stock's now at $400 per share, but they've actually done some research and determined, not only just determined, but now also modeling licensing of FSD to other companies, which, as we know, it's been in my Tesla valuation model since I first published it. Better late than never. But the fact that now Wall Street are starting to model this note also included a lot of discussion about the implications of Dojo and, in the future, Dojo as a service. This note appears to have been catalyzed by Tesla's stunning recent FSD V12 demo just a couple of weeks ago. There's mention of robotics. Is this even real life? And as I mentioned earlier, I personally give approximately zero fucks what folks on Wall Street have to say about Tesla. I do my own thinking and draw my own conclusions, which is why I still continue to say Tesla, in my opinion, is the best risk-adjusted opportunity that I'm aware of in the stock market. And I've been buying hand over fist with every spare cent. It's also why I didn't chase after Tesla stock when it got as low as almost $100 per share with my own fair valuation, because I don't care what the stock's currently available for. My fair valuation is driven by assumptions in my valuation model. But it's important to understand that there are many big institutional investors who blindly follow the folks on Wall Street. Now that Morgan Stanley, a reputable name among, at least in the Wall Street world, now that Morgan Stanley have Tesla stock as their top pick, have massively increased their Tesla price target to $400 a share. It's currently around $250. It's nice to see a pair of testicles finally return on Wall Street. And have repeatedly used the word AI in this new research note. I have a funny feeling this may have some implications for activity on Tesla stock from some of the bigger institutional investors who need Wall Street to tell them what Tesla really is. And apparently now, Tesla is not just a car company. It's going to be a very interesting week, especially Monday when the market opens. So congratulations to Morgan Stanley. They're finally starting to get it. And among their peers on Wall Street, you might even consider them thought leaders. Again, just among their peers on Wall Street. So let's see what happens from here. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.